So I welcome you guys to this class, and today I'll be teaching on the Fibonacci Retracement tool. Okay, so I said the Fibonacci Retracement tool is a tool used for knowing our buy and sell zones, and it is a technical tool. And this technical tool it helps us to know with precision and accuracy certain areas where the market players or the institutional players, they buy and they sell. Okay, so it helps us to determine that. Okay, so, and I also said that the Fibonacci tools help us to know that the candlesticks and the price movement are also a game of numbers. That means the institutional players, they know where they will buy, at what number they're going to buy, and at what number they're going to sell, and what zone they're going to buy and what zone they're going to sell. And also the Fibonacci retracement tool has several zones, okay? And it is in these zones that retailers, the institutional players, the market players, they buy and they sell. So take note of that. And I say we can use the Fibonacci retracement tool for both uptrend market and a downtrend market, okay? And it's business. So since Forex is a business, people buy low and they sell high, okay? So we have the uptrend and the downtrend. And now we have three components of the Fib retracement tool. We have three components of the Fib retracement tool, and number one is the premium zone. Number two is the equilibrium zone, and number three is the discount zone. Okay, the premium zone, the equilibrium zone, and the discount zone. So let's locate them. Okay, so let's say we have the Fib retracement tool. Let's say this is the Fib retracement tool. Okay, and we have numbers. We have 0, we have 0 to 100. Okay, and in between the 0 to 100, we have the 50%. Let's say this is 50%. Okay, so we have the 50%. So here we got 50%. So this is a Fib retracement tool, okay? So we're using this as a Fib retracement tool. So on the Fib retracement tool, we have 0, 50, 100, 0 to 100. And on the equilibrium is 50. Okay, so this zone from 50 to 100 is called the premium zone. The premium zone. Okay, while the 50% is called the equilibrium zone. And then we have 0 to 50. as the discount zone. Okay, so we have 0 to 50 or 50 to 0 as the discount zone, while 50 is the equilibrium zone. So now let's talk about the premium zone. So on the premium zone, we sell at the premium zone. So this is a sell zone. We don't buy at the premium zone. We sell here. And at the discount zone, we buy. Okay? At the discount zone, what do? We buy. And at the premium zone, what do? We sell. So take note of that. We sell at the premium zone. Okay? And what do? We buy at the discount zone. Then the question is, what do we do at the equilibrium zone? At the equilibrium zone, we don't buy or sell. We don't buy or sell at the equilibrium zone. Why? Because it is the zone of indecision. It is the zone of indecision. By markets makers or price. Okay, so take note of that. What did I say? We don't buy or sell at the equilibrium zone. Why don't we buy or sell? Because it is the zone of indecision by market makers or price. So at the equilibrium zone is either market is ranging. At the equilibrium zone is either when market gets to the equilibrium zone, price start ranging. So that zone, we don't know what's happening at that zone. So we don't want to buy or sell. Okay? At that zone, they always try to make decisions. Okay? It's a point where they are not certain where price is going. They don't know where price should be going to. So if you enter a trade there, you will lose the trade. There's a high probability that that trade will be in a loss. So you don't want to gamble your money, run away from gambling with your $50, $1,000, even if it's 1 million US dollars. You don't want to gamble your money trading at the equilibrium zone, okay? So let's move on. So using the Fibonacci retracement tool, I'm still going to draw this box before we start using the Fibonacci retracement tool. Okay. So let's say this is the Fibonacci retracement tool. What you want to see is that on a trend, or let me start like this, you want to sell here. Boom. Okay, you want to sell here. And Using the Fibonacci retracement tool, what do you want to do? You want to buy here. Okay, you want to buy here. So take note of that. You want to sell here and you want to buy here. Remember that. So guys, as I said earlier, kindly subscribe to my YouTube channel. If you have not watched the video, we have the 1 video, the 2 video, we have the 3 video, and this is day 4. The video will be uploaded on the YouTube channel. So kindly support us and encourage the work that we are doing. Remember, this is a free boot camp that we are doing. Nobody paid for this class. So we just try to help people to be profitable. We know that a lot of traders are struggling. So this is our way of contributing and giving back, okay, to traders. So please, the only way you can support us is by going to the YouTube channel, subscribing, okay, like the video, comment on the video, okay, and also share the link with friends, okay. Thank you guys. So again, as I said, you sell where? Here at the premium zone, okay. And what do? You buy here. So I'm just gonna write discount here. I'm gonna write discount. I'm gonna write discount here. And then I'm gonna write the premium here. Okay. I'm gonna write the premium and the discount here. So what did I say again? Recap, you sell at the premium of the Fibonacci retracement tool and you buy at discount of the Fibonacci retracement tool. Take note of that. So now let's go this way. So let's assume you have, so in other words, what this means is that you have to see your structure. You have to see your structure. Thank you guys for subscribing. Those that are going to the YouTube, so subscribe. Thank you guys. We are so grateful. I'm so grateful. So let's assume you saw your structure. Okay, so I'm gonna draw. So let's assume you saw, so we have this. Let's assume we have this, and we also have this. So please pay attention. So remember, for a buy, so let me write it so that I can be more specific what we are doing here. And I'm going to write a sell here, okay? So for a buy, remember, this is an uptrend for a buy, okay? So what are you going to do? So let's assume that we had our structure here, okay? Let's say we saw price came all the way down here, and then you saw your structure. So after you have confirmed other confluences, okay, like your supply and demand and also the key resistance and support. After you have confirmed your confluences, what's the next thing you do? you want to use your Fibonacci retracement tool to be able to detect if the zone where the structure is formed is valid or not. Most especially, okay, on a trending market. All right, so you want to use your Fibonacci retracement tool to be able to know if the zone where your structure is formed or where you want to buy is correct. So you don't want to gamble, as I said earlier. You don't want to throw away your money. And remember, for every mistake you make, you're going to pay in dollars. You then pay in dollars. You're going to pay, even if it's $0.5, you're going to pay in dollars. Okay. So you don't want to gamble your money and give the market lots and lots of your hard-earned money. All right. So that you don't get frustrated and depressed. So you want to be safe while trading. People say play safe. Yeah, I think the mechanical rules that you have, it helps you to be safe. So playing safe is also good. So, but you must have a mechanical rule, a system that works. Okay. So when you have a structure like this on a trending market, okay, what are you going to do? Okay. You are going to use your Fibonacci tool on the current trend of the market. Okay, the current trend of the market. So what is the current trend of the market? We're not talking about the overall trend, okay? We're talking about the current trend of the market. Okay, the current trend of the market. So if I look at this, let's say this is a chart. The current trend of the market is from here to here. The current trend of the market, where I want to place my Fibonacci retracement tool, is here to here, not here to here. Why? Because this high has been taken out. So since this high has been taken out, I want to look for a buy at this zone, not this zone. Most especially when we have a strong demand zone at this place. Okay? That means when we have a strong demand zone at this place. Okay? I want to look for a buy here. So I'm not going to place my Fibonacci tool here. Rather, I'm going to place it here. That means this current trend. Okay? So this is the current trend. You understand what I'm saying? So you don't place your tool here, you place your tool here. That trend that sweeps, the move that sweeps the current high of a buy trend, okay? Of an uptrend, I mean, okay? So what am I going to do? Since my job is to place the tool, I pick up my Fibonacci retracement tool. And even though I've confirmed the effect, which is structure, I have confirmed the criteria, and I have confirmed the cost, which is a demand. I have seen a demand, okay? That's the price is coming from here. So we have this demand. Okay, so we have this demand. I'm not just gonna take this trade. What am I gonna do? I will place my Fibonacci retracement tool from the wick of the high down to the low. So remember, I said earlier that the Fib retracement tool has three parts. It has the premium, it has the equilibrium, and it has the discount. So if I see a buy at the equilibrium, am I going to take the trade? No, don't take that trade. If I see a buy at the premium, am I going to take the trade? No, don't take that trade. Don't buy at the premium. Don't buy at the equilibrium. If you see your structure at the equilibrium, let's say here, don't buy at the equilibrium. Rather, wait for your buy. You want to see that your buy is at the discount. So we want to buy at the discount. Remember, people buy low to sell high. Okay? You don't buy high to sell low. People buy low to sell high. That's business. That's how we make profit. That's how people make profit in business. So if you go to the market to buy, let's say, a shoe, and you want to sell a shoe, you buy low. If you bought a shoe for $1, you go back and you sell it for $1.5, $2, $3, $5, $10, you know. So why? Because you want to make profit. So this is the same principle applied on the Fibonacci retracement, okay, as regards the strategy. So we want to buy low and we sell high. So we want our structure to be at the discount zone. So for a buy, we want our structure to be at the discount zone. So where is the discount zone? This is the discount zone. Okay? This is the discount zone. This is the discount zone. Okay? But okay, before I say that, we'll progress. Then I'm going to show something else. So I want to buy at the discount zone. So this structure is at the discount zone, then it's valid. Because it's at the discount zone, then it's valid. That means the price, there's a high probability chance that this buy is going to hold. So I'm expecting price to come back because it has been confirmed, and then boom. Understand? If you understand, kindly go to the comment section, say I do understand. If you understand, go to the comment section, say I understand. If you understand, go to the comment section, say I do. Okay, good. Thank you. So if you understand this, let's go for yourself. So I have this swing for itself. Where am I going to place my Fibonacci retracement tool? I'm not going to place my Fibonacci retracement tool here, because we can see the correction, okay, came here. So this is a correction. So remember that price will make another correction. If price is coming to make correction, it will be somewhere here like this. So it is that correction I want to trade. Okay, it is a correction I want to trade. So what am I going to do? I'm not going to place my Fibonacci retracement tool here for a sell. No. No. Where am I going to place the Fibonacci retracement tool? I'm going to place it at the recent swing low. Is the swing low? Good. So this is where I'm going to place it. Because why? I'm expecting price to come back, boom, and then boom. Okay? That's what I'm expecting. So let's say we have a structure. Because remember, this strategy is what? A reversal. So when it gets to that zone, price is going to do what? Reverse. Give you sign of reversal. Okay? Price is going to give you a sign of reversal. So once you see this, you see your Quasimodo, and let's say you have confirmed your zone to be, let's say it's a supply zone. Okay, let's say it's a supply zone. Let's use supply, not key resistance. Let's say it's a supply zone. The next thing you want to do is pick up your Fibonacci retracement tool. You place it at the swing low. The current swing low. Okay. Once you place it at the swing low, what are you expecting to see? You're expecting to see that structure is situated at the premium. Remember, premium, equilibrium, discount. So you want to be sure that structure is situated at the premium. So the question is, if I see my structure at equilibrium for a sell, should I sell? No, don't sell. Because you'll be used as an inducement later on. Okay? And if I see structure at the discount for a sell, should I sell? No, that's not the right place to sell. Okay? Because there's usually a high volume of sell pressure at this zone, and there is a high volume of buy pressure at this zone. Okay, we have high volume of buy pressure here, and we have high volume of sell pressure here. So you want to sell or enter the market where the high volume of sell pressure is situated. Do you understand it? That's where I want to place my sell or buy. Those zones where there is high volume. Okay, so that's where I want to do. So I come, place my tool, my Fibonacci retracement tool, okay, at the high down to the week of the low. And then I measure it. What do? I wait for price. I wait for price to do what? Boom. That's it, to continue. And price is going to continue until this low is swept. Remember that. Okay? Do you understand it? This is very easy and simple as ABC. It's easy and simple as ABC. So now, the next thing I want to show us on this Fibonacci retracement tool is this. The next thing I want to show us on this Fibonacci retracement tool is this. On the Fib retracement tool, let's say this is a Fib retracement tool. Remember, I told us we have equilibrium, right? So on the Fib retracement tool, let's assume this is the Fib retracement tool. On the Fib retracement tool, there is always a zone called the OTZ. OTZ. So the question is, what is a OTZ? It's called optimum trading zone. Okay, optimum trading zone. So let me break it down. Usually when price start buying, so I'm going to use this. So let's say it's a sell, okay? So usually when price start buying and let's say market have changed structure, okay? Or the direction of the market. When market breaks structure and has changed direction, where price comes back in terms of correction, price usually comes back to the OTZ zone, which is the optimum trading zone. And that optimum trading zone is the zone where price sells or buys, depending on the direction of the market. So usually price come back to that zone to buy or sell. So that zone is a very important zone, okay? If you go to your chart and study this OTC zone, you will see that repeatedly price usually go back to the OTC zone. Most of the buy and sells happen in the OTC zone. So that's where you want to trade. That's where it gives you an additional confidence that, yes, this zone is a good place to sell. Even if I have seen my structures, even if I have seen the supply and the demand, the cost and the effect, they are all in resonance, okay? I still want to make sure that price is or structure is situated at those zones, not just the sell and the buy zones, okay? It's situated at the optimum trading zones. Okay, good. So now, on a swing load like this, on this uptrend, all right, price usually comes back to the optimum trading zone area and then go. For a buy, for a buy, price, once it breaks, price usually come back and then boom. Okay, good. Sometimes it might not get to the optimal trading zone. It might form liquidity, okay, above the optimum trading zone for a buy and then come back to that optimal trading zone and then boom. Do you see this? So sometimes it creates liquidity above the optimal trading zone for a buy and then come back, boom. So this is the area where you want to see, your Quasimodo or your structure. Okay? Not here, except this is a resistance turning support. If it is a resistance turning support, then you want to buy here. It will form a structure for you to trade it. But a case where the resistance is not there, I mean the resistance is far, and you see something like this, you don't trade it, okay? But if you have a resistance that is turning support, you can trade it, okay? Well, in the absence of that, when you don't have this, let's say we have something like this, then you're waiting for price to form Quasimodo at this optimal trading zone, not this, but here, okay? Do you understand it? Good. So if you understand this concept, then let me show you. So the optimum trading zones on the Fibonacci retracement tool, for a sell, it's between 70%, 70 to 78.6%. For a buy, the optimal trading zone is between 31.2 to 23.6%. Okay? So the optimal trading zone for a sell is what? This. 70 to 78.6%, and for a buy, it's 31.2 to 23.6%. So in other words, you want to see that your structure is formed at this zone. From this zone upward, okay? Let's say, okay? So for a buy, 31.2 to 23.6%, downward to zero is valid, okay? So I'm going to explain that to all. So can we see my Fibonacci retracement tool? So this is the Fibonacci retracement tool. So look at the Fibonacci retracement tool. So if you see my Fibonacci retracement tool, you're going to see that I actually customize it. So I made this research myself, okay, and refined it, okay. So I customize it myself. So you can see the Fib retracement tool. So you can see this is the optimal trading zone for a sell, OTC sell. So we have OTC sell, good. And we have OTC bar. So we have the OTC sell and we have the OTC bar. Can you see? So what I want to see is I want to sell from this zone. If I see structure within this zone, so even 100, I'm going to sell. If I see structure for a buy within this zone from 31, okay, it shows that that structure is strong, okay? It has a possibility, probability of buying, okay? So I want to buy. Do you understand it? If you understand, go to the comment section or to the chat box and say, I understand. If you understand, go to the chat box, say, I understand. Go to the chat box, please. Good. Good. Azizi said he does. Okay, good. We have 12 people in this group. If you understand, go to the chat box, say I do. Okay, good. So I want to sell anything from this zone. It gives me additional confluence. And I want to buy anything from this zone. Okay, can you see? Good. So I want to buy anything from this zone, but most especially at this zone, this OTC zone area, optimal trading zone. And okay, for a buy, an optimal trading zone for a sell. But even if structure goes beyond this and come into that, it's still very valid because it still give you another chance. But the least is this optimal trading zone. If I see structure here like this at 70, I can still sell. You can still sell. If you see it at 78.6, sell. If you see it here, sell. But the point is, from the optimum trading zone, sell or buy. Sell and buy zones, that's where you want to buy and sell. Do you understand? Do you understand? So these are the areas or zones where you want to buy or sell. Okay? So these are the areas where you want to buy or sell. You don't want to gamble your money. Okay? So let's look for a pair. Let's look for a pair. Let's look for a pair. Let's look for GJ. Let's go to GJ. Okay? So I'm gonna be using GJ. So let's use GJ, okay? I'm gonna go to, let's use the 3 hours. Okay, I don't need to go to 3 hours. Okay, so we're gonna use what we see here. Okay, so let's use what we see here. Ready? So I'm gonna take off these. I'm gonna take off these so that we can. Okay, so if we look at this, we can see that market is trending up, right? We have this. Can you see? Can you see this? Good. So we can see price at these zones. So we have this. This is an uptrend. Can you see that? Good. So what am I going to do? What am I going to do? I'm going to measure. This is how I'm going to measure it. Okay. You place your feed retracement tool like this and measure. Do you understand? Now, for me, I would like to say this zone is a critical zone. So can you see what I was saying or what I said earlier? Can you see that price came into the optimum trading zone and then bought and then boom? And you can also see that price created liquidity. Look at exactly what I said earlier. Price created liquidity close to the optimum trading zone. This is liquidity. Can you see this? So it gives you an additional confluence that yes, the price created the liquidity, and then what happened? Bought at the OTC zone. Can you see the accuracy? This is the accuracy. This is exactly what I'm talking about. Can you see that price gave us liquidity close to the optimum trading zone and bought exactly at the optimum trading zone? And if you go to a lower time frame, you will see, let's go to a lower time frame and see what we're trying to do. So can you see? This is structure. Can you see structure here? Can you see structure here? This is structure. So you can see a break. You can see a break. And then we see a liquidity here. Can you see liquidity here? We saw liquidity here. And then price came, swept the liquidity. Can you see? Why? Price came, swept the liquidity, and then boom. Can you see that? This is actually structure. Can you see that? And then where is price coming from? Even at the OTC zone, okay, the OTC buy zone, we can see another block. This is another block. Can you see this other block? This is another block. We have a fair value gap. So this is a demand zone. Can you see that? That's another block. So price is reacting well at the other block and also at the OTC zone. Did you see that? Exactly, exactly. Can you see what's happening? Good. So another example, this same GJ, let's go. Another example. So can you see? Can you see? Let's go to 3 hours. So this structure you see, do you know why I drew this line? The last line below? Okay. All right. To confirm where price is coming from, I have to trace back. So can you see? Good. Now, so this is the market that has been buying. Okay. So for example, I want to buy. What am I going to do? We can see the swing. You can see the swing. Look at this swing that's happening here. Boom. Can you see this? Massive. Good. So if I want to buy, I place my Fibonacci retracement tool on this swing. Good. Does it confirm? Look at the OTC zone. I want to show you the OTC zone. Look at the OTC zone. Can you see the OTC zone? Exactly what I'm explaining to you guys. Can you see? This is sniper entries. For those looking for sniper, usually price come to the OTC zone to buy. Boom. Can you see it? To confirm what I just said, look at it. That's sniper entry, OTC. Price come to the OTC zone and then boom. That's it. So if I say I want to buy on this, so look at this trend. I'm going to place my Fibonacci retracement tool on this for this. This. Can you see this? That's what I'm going to do. That's it. That's all I need. So anything buy is I can buy from here. If I want to buy, I'm going to place my Fibonacci tool from here. Boom. Okay. So anything from this zone is a good place to buy. Okay. That's it. Do you understand it? If you understand what I just explained, kindly go to the chat box, say I do understand. If you understand, kindly go there, say I do understand. Do you understand? I just explained to us how to use the Fibonacci retracement tool. Do you understand? If you understand, go to the chat box and say I do. And once again, kindly help us, support us by subscribing to the YouTube channel. Okay. We have over 100 and something views, but we have few subscribers. Okay. It's abnormal. So let's support this bootcamp by going to the YouTube channel, subscribing, like, and comment on the video. So we have so much value. You can see this on YouTube. This is the only YouTube video you will see that has this content and value. Okay, so please do well to subscribe to the YouTube channel, like, comment, and also share. Okay, just use your phone. The only support you can give is to use your phone and just click on the subscribe button. Okay, so that's it. Is there any question? If you have any question, please do well to ask your questions right away. We'll be closing very shortly. If you have questions, do well to ask. If you have questions, do well to ask, please. Settings for fee, okay? You're welcome. So I'm going to open up my Fibonacci tool settings, okay? So that you can see the settings. So this is the settings for the Fibonacci retracement tool. This is the settings you need for the Fibonacci retracement tool. Okay. This is the settings, so it will be on the YouTube. So look at the settings once again. So this is the settings. The golden zone for a buy, red for a sell. The golden zone is the buy, red for a sell. Okay, so this is it. Okay, any more questions? Okay, Kenny said, can I use the fib on a 15 minutes time frame? Yeah, the fib can be used in all time frames. Is it all time frame? Okay, from 15. But this strategy, we don't trade this strategy on 15 minutes, please. Please and please. You don't trade this strategy that we trade on the 15 minutes time frame. Okay? We only trade the strategy on 30 minutes, 45 minutes, 1 hour, 2 hours, 3 hours, 4 hours. You don't trade the strategy on 15 minutes time frame. Even though you can use the fib retracement tool on 15 minutes, but we don't trade the strategy on 15 minutes time frame. So you got to be a person that have patience. Okay, you must have lots of patience to trade the strategy. Okay, because it's higher time frame. So we don't trade that. So the mid time frame is 30 and 45 minutes, while the higher time frame 1 hour, from 1 hour to 4 hours. Okay. Then daily, weekly for your directional bias. You can use that for a directional, depending on the time frame you're trading. Okay. So any more question? Do we have any more question? Okay, the swing highs and the swing lows. Jeff says, how can we recognize the right start point to draw it in the trend? Okay, the swing highs and the swing lows. So I said earlier, so for example, we have a trend like this, okay? And let's say we have price is coming back to make corrections, okay? If price is coming back, price is usually from this. Okay, so one price get back to this swing, okay? So this is the swing you're using. That current trend. So you place your Fibonacci at the wick, not the body, the wick down to the low, the wick of the high and wick of the low, like this. So always place your Fibonacci 2. Always place your Fibonacci 2. Oh, I think something went wrong with the settings. Let's see. Okay. So always place your Fibonacci 2. Take it from the high down to the low. Not the low to the high, okay? From what? The high to the low. The same thing everywhere. Be the buy and sell, okay? So take it from the high to the low, okay? And then, yeah, so that's it. That's it. This is it. OTZ, from OTZ, boom, the buy. Any other question? You're welcome. You're welcome, Kenny. You're welcome, Azizi. Any other question? Do we have any other question? Okay, in the absence of no other question, I want to thank you guys for joining today's bootcamp. See you on Monday, okay? And also don't forget to subscribe and share the link, like and comment on the videos. We'll be uploading the video on YouTube, so please do well to visit the YouTube channel and share with your friends, invite friends, okay? And also remember we have a paid mentorship 2 months masterclass. So for those of you who want to be part of the paid membership, we have lots and lots of value. Okay, this is just a drop of the ocean. Okay, a drop of water. So all these informations and value we're sharing are just drops of water. So we have lots and lots of value to be shared. So for those of us who want to learn, okay, how the full course, okay, do make sure to send us a message, okay, either on WhatsApp, on Telegram, on email, and then we'll get back to you. Sign up for the 2 months masterclass. There you're going to have lots and lots of value, more than what you need to know, more than what we have been having, okay? So please do well to message us for those who want to sign up for the masterclass, and we'll be rightly available to help you, okay? So glad to have you and see you on the final day. So on the final day, we'll be talking about POIs and putting all together. Then I'm going to talk about, okay, yeah, so that's what we're going to be out at, talking about the POI point of interest. So do well to be there on Monday. Have a great weekend. Bye.